Hey guys, my name is Jason Cooper and this is another episode of the Kickstarted Minute. Today I want to talk about some news from the world of equity crowdfunding. For the uninitiated, equity crowdfunding is when a company or a project wants to raise capital from the crowd. They literally are able to give up little pieces of their business in exchange for money. It's different from the type of crowdfunding that most of us are familiar with, that we see on Kickstarter and Indiegogo, where project creators are offering rewards, products, and services in exchange for capital. This is closer to what you see on the stock market, where you're literally getting a piece of a company, except that for the business, the advantage here is that you don't have to go through the long and probably expensive process of becoming a publicly traded company. As a small business owner, you can go out and ask for capital. And from the backer's perspective, the idea is that you're making a small investment in exchange for a piece of this company and that you hope to see a financial windfall from later on. And the rules around equity crowdfunding sort of come back to the Jobs Act, which was passed by Congress in 2012. And over the last few years, it's been up to the Securities and Exchange Commission, the SEC, to figure out exactly how this law would be enacted in practicality. How is it going to work in the real world? How are real people going to have an opportunity to make equity crowdfunding investments? Because obviously it would be dangerous, I suppose is the right word, to allow anyone just to sort of put up a project and raise funds from the public without there being some sort of structure around it. And this past week, the SEC finally put out what were the last few touches on the rules around equity crowdfunding. And the basics are this, that if you have a net worth or an annual income of under $100,000 a year, you'll be able to make equity crowdfunding investments of up to $2,000 or 5% of your net worth, whichever is greater, every year. And if you make over $100,000 or have a net worth of over $100,000, you can invest up to $100,000 every year. That being the sort of maximum that you can play with in the space of crowdfunding. And as a business, the most that you can raise through equity crowdfunding every year is $1 million. And so fairly modest amount of money that can be put in, but I think what it's going to allow for is the marketplace to sort of find its footing, for people to figure out how crowdfunding for equity is going to work, both as companies and as backers, and whether or not it's something that is going to play to our worst fears and that it's full of fraud and bad actors, or it's going to be something that really gives an influx of capital to small businesses and allows creators and dreamers an opportunity to raise funds in an interesting new way. So the next 18 months, 2 years is going to be really interesting as the equity crowdfunding world sort of takes off. I think inevitably we're going to see a huge impact from the space. We're going to see growth there. In the limited amount of equity crowdfunding that's already happened, we're seeing a lot of interesting stuff happen in the world of real estate, in the world of filmmaking. So as it's been opened up to a broader spectrum of society, I think we're going to see an even bigger impact in the world of equity crowdfunding. So if you want to learn more about crowdfunding and equity crowdfunding and just crowdfunding in general, I encourage you to subscribe to our channel. And if you want to hear the stories of real small business people who are trying to fund their dreams, please check out our documentary film about crowdfunding called Kickstarted at our website, which is kickstartedmovie.com. And as always, you can find us on Twitter at KickstartedFilm. We'd love to hear from you and look forward to connecting there soon. Thanks for watching.